Welcome to another case at Perspectives Eye. Scenario 1. At one company, an unexpected rise in payroll expenses led the chief financial officer discover the creation of 10 employees costing $600,000 into personal accounts over 1 year. There is no record of hiring them or of the resumes. No one would receive the W-2, so this approach is safer for the fraudster. Scenario 2. An actual employee leaves the company. The record is held in payroll records for several additional pay periods, with the fraudster intercepting those additional paychecks. Welcome to the shadow world of payroll fraud. We are exposing today the sinister practice of ghost employees. This video will be divided into 5 parts: the ghost in the machine, the risks for business, the risks for individuals, how to detect payroll fraud, methods to detect payroll fraud. Ghost employees are fictitious workers added to the payroll by someone within the organization, typically with access to the payroll system, who do not even work at that company. These employees that are created and maintained in the payroll by the payroll department receive regular paychecks, which are then collected and cashed by the perpetrator. Payroll fraud encompasses a variety of fraudulent activities related to the payroll process, including ghost employees, falsified hours or overtime, and unauthorized pay rate changes. What are the common ways to create a ghost employee? Typically, an actual employee can be on leave and is maintained in the payroll records during their absence, again with paychecks being intercepted by the fraudster. Also, when an employee leaves a company, his or her records are maintained for several pay periods for the fraudster to intercept those payments. A false employee identity is created and maintained in the system with their paycheck routed directly to the fraudster. What are the risks for businesses? Ghost employees are a financial hemorrhage. The consequences could be devastating. 1, through financial loss, where ghost employees and payroll fraud result in significant financial losses due to the payment of salaries and benefits to non-existent or undeserving employees. Reputation damage. If payroll fraud becomes public knowledge, it can harm the company's reputation, leading to a loss of trust among employees, investors, and companies. It can have legal consequences. Businesses may face legal repercussions, including fines and sanctions, if found negligent in preventing or addressing payroll fraud. Operational disruptions. Investigations and corrective actions can disrupt normal business operations, diverting resources and attention from core activities. Protecting your business from ghost employees requires vigilance and robust internal controls. What are the risks for individuals? While businesses are the primary targets, individuals could also become victims through identity theft, where your personal information can be used to create a ghost employee; through tax problems, meaning that you could face tax issues if your identity is used for fraudulent purposes; and you could face legal troubles. Involvement in payroll fraud can lead to criminal charges. Before entering into part 4 of this video, if you like this content, please subscribe to our channel, give us a like in this video, and please leave comments so that we can become a better provider of content for you. How to detect payroll fraud? Protecting your company is crucial to avoiding the pitfalls of ghost employee schemes. Through regular audits, conducting frequent and random audits of payroll records to identify discrepancies and ensure that all employees that are listed are legitimate. Check for anyone showing few or no deductions from their pay for both taxes and Social Security. Segregation of duties. Ensure that different employees handle payroll preparation, authorization, and distribution to minimize the risk of collusion. The verification process. Implement processes to regularly verify the existence of employees, such as periodic physical headcounts or checks. Data analytics. Use data and analytics tools to monitor payroll data for unusual patterns, such as multiple payments to the same account or payments to non-existent employees. Employee tips. Encourage employees to report suspicious activities through a confidential whistleblower system. What measures can you use to prevent payroll fraud? Both businesses and individuals can take steps to protect themselves through strengthening internal controls. By establishing strong internal controls over payroll processes, including robust authentication and authorization protocols. Through the use of payroll software, implement secure payroll software with built-in fraud detection features and access controls to minimize manual handling of payroll data. Eliminate paper paychecks and use direct deposits. Through regular employee verification, periodically verify the identity and employment status of all employees, especially those receiving direct deposit payments. Check payroll records frequently. Look for duplicate names, addresses, bank accounts, and social security numbers. Make sure that you apply training and awareness. Educate your employees about payroll fraud risks and the importance of maintaining payroll integrity. Provide training on recognizing and reporting suspicious activities. And whistleblower policies. Implement and promote a whistleblower policy that protects employees who report fraud or unethical behavior. By being vigilant and proactive, you can reduce your risk of falling victim to ghost employee fraud.